I have a question.
You ask them a question.
Okay. How many of you work in technology? How many of you work in the front office? How many of you understand that going forward, we can no longer be just financial services companies? We have to be technology companies. Okay. I just wanted to understand where you come from.
This is like an unpanel where the panel asks a question, which I quite like. It's like an unconference, isn't it? I've never thought of that, but we should do that from now on.
Hi. Maybe a slight tangent, but still on the same track. So you talked very much about robo and AI systems in finance. But one thing I'm interested in is voice recognition and speaking to your phone. So sort of replacing the advisor altogether. So I trust my phone, I trust my service provider, and I'm happy with my thumbprint and my eye scan. And once I've done that, I want to ask it, what my balance is, what my shares are doing, how my company's performing, and just get rid of that conversation, not walk into the bank and not even log on online. So do you think that the voice parts of AI are relative to this finance world as well?
UBS is already looking into integrating Alexa into some of their offering. I mean, UBS, their innovation team is just absolutely brilliant. It's run by a gentleman called David Bruno, and he's truly a visionary. And yes, from what I know, they're looking into integrating it. To answer your question, I believe it'll come, but I also believe the systems will gain momentum and traction only if they will have proven to clients that they can deliver what an AI system is supposed to deliver in some of its incarnations as a truly personalized service to the client. When that service is truly personalized, that's when you start developing trust with the client. The client trusts the system. And then next stage is engaging in exactly what you said. I believe it's possible. Probably it'll take a little bit longer for people to just accept that concept. But it is possible, and UBS is already looking into it. They've already launched a service for high net worth individuals, which is powered by artificial intelligence. Goldman Sachs, they're building up a private bank centered on AI from the ground up. So they start from zero. So I think that speaks volume.
Sorry, quick, seeing as we're doing a sort of rather reverse inquiry, how many of you work in asset, is this on? In asset management or private banking or a trust environment? Okay, so less than 5. All right, well, I was going to add to that subject. So just speaking as, we're very popular people, speaking as a banker, I think about robo-trading and I think about asset management, and UBS is a good example. Think about the structure of financial services, particularly large banks. So they have complexities of integrating things like MiFID, you have regulatory capital pressure, you have issues around the struggle to earn your cost of capital. Half of them can't earn their ROE. We're operating in a very, very difficult banking environment. What does it mean to be a bank? Usually it means having an incredibly large cost base. In the case of a large European bank like a Deutsche, SocGen, UBS, BNP, you're talking about cost bases of anywhere between, permanent cost bases that is, of anywhere between 30 and 50 billion euros. That is a huge cost base. So what happens to you in a year like this year in Q2 or Q3 when you have poor client flows, you have a lack of trading activity, and yet you have this massive, hugely expensive cost infrastructure. You have fee compression, you don't have revenue generation, and so inevitably those 1% fees that you can and do aim to earn private banking, and that's at the thick end, inevitably are not enough. And so you need to find ways of slimming down your cost base and cutting your cloth accordingly so that your earnings side of your balance sheet stacks up. And this is the way to do it, to take out costs. And actually everybody smart in the industry, whether it's CS, UBS, Deutsche, are looking at it, as are the big East Coast private equity houses, as are the larger hedge funds. So, speaking as a token finance guy, I very much subscribe to this thesis.
Can I just ask the panel a quick question? you've come at us with a bunch of technologies, you've come at us with a bunch of ideas and bits and pieces. That's all very good. Is this the death knell for the large institutions now? Are we looking at probably putting this technology into more mobile, more faster thinking, smaller businesses? Or is this really is just the big guys sitting there trying to grab that pot of large money that they have?
To me, I think it's ancillary, and I think it's additive, and I sort of like the view that's forming at the back of the room, leaning on the bar, that okay, AI is something we're a little bit concerned about, we're interested in, but we're just sort of, maybe like 10% pregnant, and that's fine for now. But used optimally and used intelligently, pardon the pun, and correctly, I think it's highly additive, but it will not become core, and it will never replace human functions. Because so much of finance, whether it's what I do, investment banking and corporate finance, or what a lot of people in Jersey do in private banking and asset management, it is people and it is relationship centric, and you will never lose that. But in terms of taking away the burden of those high cost, lower value added interactions, as we saw in a typical client meeting, open meeting that could last an hour and a half, 2 hours, I can see how that can become, very much part of the industry going forward.
I read somewhere a few weeks ago in a research, I think it was McKinsey, but don't quote me on that. They were saying that in 30 years, banks will be invisible. So that is the prediction. So for banks to be invisible, it means that they will have to rely on technology to engage with their client base. There's nothing wrong with being invisible. I think everything is wrong with being inadequate. And I think, and I'm prepared to put money on it, and I'll tell you about a bet which I did about 18 months ago in a minute. I'm prepared to put money on it. Those companies who've got their boards of directors thinking, we are fine. Sorry, I have to quote you on this one. We are fine. We rely on client face-to-face interaction. It'll be here for as long as we're here. Absolutely true. But what happens after those people retire? That's a big question. And it's a soul-searching exercise for board of directors to really look into it and say, okay, where is this bank going to be in 5 years' time, in 10, 15 years' time after I leave this board of directors? This is serious. Those people and those businesses which will not look at this technology, is not the flavor of the month. It's a tool. It's a strategic capability necessary, exactly as people invest in the cloud. It's the same thing. They have to invest in this technology to be able to compete. The cognitive era is upon us, is going to embrace us. And those who are already embracing it, they will be the winners. And obviously, there will be losers. People who will be businesses which will disappear.
Hi. Yeah, this AI stuff, yes, it's great, but it's also caused market crashes. And when you develop AI to do this, you can also develop systems to manipulate the system, and that's also a risk.
We have a company which we've covered in our newsletter, Cognitive Finance newsletter. It's a formal verification algorithm for financial algorithms. So basically, it's like a virtual compliance officer which gets into those algorithms and checks them. So this is one company which is happening. So I've got an answer to your question.
Okay, but that's one company.
And there are some more?
No, but globally, though, you can manipulate and cause it.
I totally take your point, and I agree with it. As somebody who is reasonably connected to financial markets, I've seen some pretty obscene examples. We've had a flash crash in the DAX. We had a 4% down move in a low volume environment in 15 minutes. We had a similar one in the US. We've had a similar issue with the FTSE, where we had an intraday swing in sterling, which should never really move more than 1% in a day. And post-Brexit, and I don't mean in the immediate aftermath, I mean 10 days after, we had a trade triggered in Asia, which was significantly augmented by a quant platform, where the pound opened at 129 against the dollar and traded as low as 123, and this was all black box algorithmic. So your question is, can the system be open to abuse? Yes, we have, and we've seen it.
Imandra, the system I've just mentioned to you, they look precisely in this kind of algorithms. Precisely. Black pools have been around for a long time. What we are talking right now is AI for investment management function and trading. As I said earlier, there are AIs which deal with different functions within a business. Yeah. So before we just say AI, just take it out, we don't want to talk about it. I think it's really important to make that distinction. And there are, Imandra, and I'm very happy to send you material on this company, so you see that there is work being done in this space. Imandra does exactly this, looks into the black pools, looks into this trading black boxes, and tries to find out what's wrong with them.
I completely appreciate where you're coming from, but if you're saying 30 years' time this is adopted, and the only 5% has adopted that to combat against it.
But we're working. But that's why when companies invest or the investment funds invest in this technology, there is a clear understanding that this kind of companies form the core function. Again, it's the compliance function in a virtual business, and it's absolutely essential to be delivered. And we're talking just one company, which we have showcased, but there are some more out there.
Having worked in finance and investment banking for a long time, since before I started at Morgan Stanley in '96, where I had a lot more hair, there have always been quant platforms and algorithmic platforms, and gosh, aren't they smart. But actually, the reason why I joined Bluepoint, because when I was younger, I was also a fund manager, so I've lived and breathed it, and I've run money into and during the financial crisis. Boy, that was really fun. Imagine running a hedge fund into that. So apart from banging my head against a brick wall, I kind of quickly, what drew me to Bluepoint is it is not an exclusive closed black box that tells you what to do. It is a user-defined tool that takes away your intraday cognitive bias and your ability to make bad decisions. You can sit there as a portfolio manager or multiple portfolio managers with an investment committee and with a CIO at the start of a quarter or ahead of a big tail risk event like into Brexit, into the US election, and you can sit down, okay, look, all right, let's look at these macro filters, which we wrote very, very carefully, by the way. And these are things that you all read about in the newspaper all day, every day. Changing environment for growth, China slowing, China accelerating, the oil price, US rates rising, my world, commodities. How many of you know this? The FTSE commodities sector year to date is up 100%. In dollar terms, it's up 130. If you'd had those conversations on a monthly or quarterly basis ahead of deciding how you want to be invested, you would then be able to implement those and gently tilt your asset allocation. But nobody is going to hand over your own investment decisions to a black box, then say RoboTrade, then go and execute all these trades. It is the user first, and that's why we're doing this.
100% agree. 100% agree.
But you can always have what you've just said. So the user can implement the changes, but the system can make recommendations. And I think that is the value of this technology. It's absolutely essential, to make the difference between a technology which works on its own and no one knows what's happening in the black box. Again, there are AI systems out there which you can play them back and you can see how they reach decisions. So, yeah.